All right, well, I hope all of you are having a wonderful New Year's Eve. It's 10 a.m., right around where I am in the Midwest. Going to be going over what Bitcoin may potentially do here in the next week or two. Could see an altcoin rally sometime in January, you guys. I'm sorry I haven't been posting very much. Been feeling a bit under the weather, been a little bit overworked, haven't put my health as priority numero uno. That's where I effed up. For all of this to work seamlessly and effectively, we all need to make sure we put our health priority number one because the priority number one. Anyways, let's look at the market. Bitcoin is chilling just below 48K, you guys. Bitcoin dominance didn't shoot up even with the most recent volatility. Ethereum dominance actually climbing down a bit. I think some people are putting their money into some layer ones or some NFT plays. We're going to be going over 5 cryptos that I have on my watch list going into 2022. I think these cryptos have immense potential from anywhere from 3 to 5x gains, upwards of 20x gains on the smaller low caps on our list. But taking a look at the Bitcoin chart, just to give you guys some reference, these red boxes indicate a downtrend. If you go back, I showed this actually a few weeks ago on a stream. If you go back towards the beginning of the year, just this year, we had a 19-day downtrend that lasted roughly from the second week of January all the way until roughly the last few days of January. And then we had another short downtrend in late February, another downtrend in March, and then we had that huge downtrend that started all the way in April, didn't bottom out until roughly July 20th. Then we had that correction back in September. That was another 3 weeks with a downtrend. Right now, we're experiencing something like a 6 to 7 week downtrend. We haven't really put in a lower low, but I do think, you guys, that we are going to see some volatility here in the coming days. This may sound goofy, but new moons and full moons. New moons lead to dumps, traditionally speaking. Full moons lead to pumps. What does this mean? Well, when there's a new moon, typically the market goes bear. What does that mean? Well, typically people start selling off their crypto for whatever reason. They may be taking uh, some profits, quote unquote, to kind of like offset. Maybe they took too many losses this past month and they're trying to offset some of those. Also, I thought this was total BS, but no joke. I followed this trading group that I'm in. They follow the moon cycles, and it lines up almost exactly. Like every time there's a new moon, market goes in a downtrend. Whenever there's a full moon, there's usually a pump in the market. So we may be seeing some more volatility. Remember, you guys, we did wick down to 42K, and we haven't filled that wick. So maybe this volatility is what brings us to that 42K, and then maybe we see a big jump up in price action. Who knows? But onto the 5 cryptos, because I know that's what you guys are here for. Here we go. So we got Luna, Matic, Link, and Engine, and VGX. I'm going to go a little bit over each one to give you the gist as to why I'm bullish towards each one. So first one on the list is Luna Terra USD. This could be for Terra One and etc. As you can see, ecosystem of Terra is set up on a payment app, Chai, and a savings protocol Anchor, synthetic stock market Mirror, and a bunch more. Insurance protocol Ozone. Shows you how many people are using Chai, 2.5 million users, roughly 60K daily active users, and a transaction volume in June of 2021. 42 million USD, orders of magnitude smaller than Visa and MasterCard, but much more real world use than many other crypto projects. Now, why am I focusing on Terra Luna out of the layer ones? Well, It's very deflationary in comparison to the other layer ones. It's actually better than Ethereum as of right now. Now, ETH 2.0 may change this, but I'm going to hedge some bets with Terra Luna and Matic. I'm going to go into Matic in a bit. But the reason why I'm so bullish with Terra Luna is because they're deflationary, one, and they have a higher TVL than pretty much all the other layer ones. What does that mean? Has a higher total value locked than Cardano, has a higher TVL than AVAX, it has a higher TVL than Cosmos, it has a higher TVL than Polkadot, has a higher TVL than Binance Smart Chain, has a higher TVL than Solana. It does not have a higher TVL than Ethereum, but I mean, if more and more people catch on to the deflationary nature of the Luna token, I think we could see a change in that. And if Ethereum 2 does not prove to be successful as they intended it to be, I think we should see Luna's value go up immensely because it's already kind of deflationary. But yeah, here's the tokenomics. So look, Terra UST represents a stable coin. Luna represents the reserve or governance token used to hold Terra to its peg. The stablecoin has not only used the Terra ecosystem, bridges have been built to enable usage in other ecosystems like Solana. Tokenomics, due to the built-in stablecoin, are a bit more complex than those of Bitcoin and Ethereum, but the details below should explain how it works. So the stability reserve is used to manage the network's early stability and intervene with injection of Luna where required. If demand increases rapidly, the Terra team can burn Luna from the reserve to supply more Terra. More on this later. Terra can then be used to many different fiat currencies, which is what I was talking about earlier. Terra USD, UST, pegged to the US dollar, has the biggest market cap and transaction volume. Then you have Terra KRW or KRT, pegged to the Korean won, used in the Chai payment app. For the purpose of this analysis, we'll be focusing on the UST to explain the mechanics, but peg currency is interchangeable with any other Terra stablecoin. Very good stuff. So whenever there is a high demand for UST, the protocol market maker offers an arbitrage opportunity through minting Terra. The demand will lead to an increase in the price of UST in the market and will lose its peg to the US dollar. And arbitrageurs can now trade in Luna for Terra 1-to-1 ratio, allowing them to sell the newly minted UST for a profit at the above peg market price. Luna, on the other hand, is burned. So this is where the deflationary nature of the token comes forward. Now, if you compare Terra Luna to these other layer ones, look, $32.21 billion market cap. It's lower than Cardano. It's lower than Solana. It's lower than Binance Smart Chain. Now, if we do some quick numbers, I mean, right here is a like 1.5x to up to Solana. Up to here is almost, it's like a 2.75x. Up to Ethereum's a solid over 10x. I don't think we'll be seeing that here in the next year, but who knows? I mean, if the pandemic persists, pardon me, as it's been going, I think governments will continue to print money like crazy, make the money printer go burr, which will force more and more people to look into stocks and crypto as an escape in a bank. It's no bueno. Savings accounts are SHIT in today's day and age. So why even park your money there? Put in something like crypto. Maybe Luna is one of those altcoins that you want to take a look into. Now, Matic, on the other hand, next focus is Matic. I don't know why this price is not updating, to be honest, but as you can see, it's got a lot of active delegators. It's a lot of transactions being done on the Matic network in comparison to Ethereum. Just to give you some comparisons with Matic, the costs to do transactions on Polygon as opposed to Ethereum is ridiculous. Like, look at this. Ethereum transfer on Ethereum costs you $6 to $7. Over on Polygon, It's literally a little bit over a penny. NFT transfer over on Ethereum will cost you $16. Polygon, it costs you 3 cents. ETH ERC20 token swap over on Ethereum costs you $41, $42. Over on Polygon network, less than 10 cents. To add liquidity, it's another 45 bucks on the Ethereum network, while over on Polygon, it's only 8 cents. OpenSea registering your NFTs and whatever, $125 over on Ethereum network. No bueno. Polygon sitting at 23 cents. So as you can see, the transaction cost per each network is drastically different. Ethereum networks cost basis to do transactions is way higher than Polygon, and that's why we're seeing so many companies partner with Polygon for NFT gaming and stuff like that, because they already know unless Ethereum 2.0 is super successful, Polygon's going to be the way to go. If projects want to scale and they want to do stuff with crazy amount of transactions, they don't want slow speeds, Polygon is the move, and that's why people are already making the move. But as you can see, there's a lot of companies partnering with Polygon. You have Game On partnering with Polygon to make new NFT games. You have DraftKings NFT Marketplace partnering with blockchain developer Polygon. You have Portal partners using Polygon for DeFi with Bitcoin. That's pretty big. And then, not to mention, they're going to be introducing EIP 1559. They're doing a test net right now. This is roughly like 2 weeks old, so it is kind of old news, but they are looking to do a similar thing to what Ethereum did just this past summer when they did the London hard fork with the EIP 1559, which means Matic or Polygon, however you want to call it, is going to become deflationary in a similar way that Ethereum is right now with the whole burning process with EIP 1559. So that will be very good. Not to mention, Uniswap did actually confirm that they are switching over to Polygon. They did this, I believe, last week. So I believe other DEXs will follow suit. They will want to use Polygon for the cheap transaction fees, the speed, etc., just to avoid those high gas fees and the congestion over on Ethereum network. But yeah, the reason why this stuff is good is because the added benefits of this implementation of EIP 1559 will allow users to better estimate costs when they're trying to do transactions. That way, there are less users actually overpaying for the transaction costs. So that's good. Because over on Ethereum, kind of like just throwing darts at a board, trying to figure out the exact price you should send. A lot of people overpay just to make sure the transaction goes through because Ethereum is kind of a mess. But one more little thing with Polygon before we hop forward. Bubble House partners with Polygon to become the first carbon neutral and eco-friendly NFT marketplace. Pretty cool stuff. Those of you super eco-friendly and stuff like this will do it for you. Next project on our list is Chainlink. Now, Chainlink has been quite the slow mover for second half of 2021. Talked about in plenty of videos. It's been underperforming, to say the least, for the second half of this year. It did reach an all-time high right around $52 earlier this year during the first half. And Link tends to do really good through the bear market, so just hold that in the back of your noggin for later. Link is also the leading Oracle play in the crypto space, has the most partnerships. As you can see, they have a crap ton of partnerships. They actually have the most partnerships in the crypto space. So Link is a great play. I think as NFTs and DeFi gain more popularity, I think Link will continue to grow, and it is definitely a blue chip in the crypto space. So don't sleep on Chainlink. Our fourth pick is Engine. Now, Engine, relative to many gaming cryptos or NFT play cryptos, is pretty low when it comes to price. I mean, as you can see, it's $2.70. Its market cap is $2.28 billion. Now, comparing this to some other games, it's got a lot of potential to move up. I mean, look at this, for example. Sandbox, Axie Infinity, Mana, they each respectively have a 5.6, 5.9, and a $6.2 billion market cap. I'm not saying Engine will catch up to the likes of Axie Infinity or Mana, but I mean, from here up to there is roughly a 2 to 3x. I think there's a lot of potential for Engine. Not to mention, they actually just launched Efinity. So Efinity is a next generation blockchain for digital assets built on Polkadot. This is going to bring NFTs to the Polkadot network. This is very, very big. They also just got the 6th Polkadot parachain auction slot, which is very, very big. Over 20,000 community members contributed 7.7 million Polkadot tokens to secure the parachain auction. And that is going to be very, very good because NFTs are going to make their way to Polkadot via Efinity. I still don't know much about the Efinity token itself, but I think Engine will boom because of this. I mean, Polkadot is a popular layer one. It's one of the top five layer ones out there in the crypto spaces of right now. But what are the incentives? Well, Affinity compensates network participants with the EFI token, collateral nodes who run the network, users who govern the direction of the network, buyers and sellers who facilitate price discovery. Developers who propose projects built on Affinity are eligible for grants from the community pool, and early adopters and creators increase their token value with bonding curves and liquidity. So very, very cool. And again, that low market cap, you guys, you don't want to sleep on all of them. I think Engine is a good play, but if we're getting into low market caps, we got VGX. I don't know why this crypto has less than $1 billion market cap. I think it's extremely undervalued. I mean, I think so many people are missing out on the opportunity to grab this token for the low. Personally, I'm trying to accumulate under $3 as of right now, but I'm still buying above 3, but most of my buy orders are below $3. The reason why I think this token is going to be big is because the whole idea behind VGX token is going to stack it on the Voyager app. So essentially, at 100 VGX, you start earning 7% interest on the VGX token itself, which slowly gets you closer to the first tier of the VLP. Now, what is the VLP? The VLP is the Voyager loyalty program. So starting at 500 VGX, you become an adventurer, which means you already get that 7% on your VGX token, but now you start earning an extra 0.5% interest on your Bitcoin, Ethereum, and your USDC that you hold on the app. Not to mention, you get crypto back rewards. So they give you an estimated cost for the transaction, and then there's the filled cost, the spread between those for every transaction that you do. Gets paid back to you in VGX at halfway through the month and at the end of the month. So that's very, very cool. Refer a friend, you get, instead of just $25 of Bitcoin, you get $5 in VGX for referring a friend. Not to mention, there's going to be crypto withdrawal discounts. They're going to be rolling out the debit card pretty soon. In my opinion, it's going to be a no-brainer to hold some money in USDC over on Voyager because they're going to have this debit card where you're going to be able to use that USDC wherever. And it's going to be very, very cool. Not to mention, as you can see, as you stack more VGX, the earning rewards boost on your Bitcoin, Ethereum, and USDC goes up to 1% at 5,000 VGX, 1.5% at 20,000 VGX. crypto back rewards increases a bit. The amount of VGX you get back from referring a friend goes up. Discount you get on withdrawing money and stuff like that goes down too. You're going to get crypto back rewards with your debit card. So that's going to be cool. I think it's going to be a no-brainer. I look at it like, look at the CRO token, but look at it as if it were with a way smaller market cap is what I'm trying to say. I mean, compare the two. You got, all right, so CRO, $14.718 billion market cap, and VGX has what? 856 million. Easy 15 to 20x from here on out. I'm not going to put a date on it, but I think VGX is going to boom like crazy as more and more people realize the utility behind stacking this token. They're expanding to Europe next quarter. I know France is one of the confirmed countries. There's a few other countries, but again, let's be super conservative about it. Let's say 100 million Europeans have the potential to be exposed to Voyager and the VGX token. Let's say just 1% of that 100 million adopts VGX token. There's going to be a really big supply crunch coming for the VGX token in the near future. Now, again, we don't know how soon people are going to catch a whiff of the utility behind stacking this token, but I can tell you that I think this is a great long-term play. And with a super low market cap, if you get in now, you will make life-changing wealth. I mean, it won't even take a decade, in my opinion, for it to go all the way up here in the top 10. I mean, look at Binance Coin. It could be a Binance Coin 5 to 10 years from now. Could you imagine VGX token being worth a few hundred a pop and you bought it for under $5, under $3? Think long term. That's the way I'm thinking with VGX. I'm gradually putting like $50 to $75 a week into the token because I think it has a lot of upside potential, not just in the next year or two, but in the next 5 to 10 years. So those are the 5 altcoins that are on my watch list. Be prepared for anything in the market, you guys. We could see some more volatility here in the next few days with the new moon coming up. So be sure to have some cash on the side. That way you can take advantage of the dip and buy things low at at a gain. Because too many people hop into the market when everything's in the green, and then the market takes an SHIT, and then they're like, oh man, I wish I only put half of my money in. That's why you always have to have some cash on the side. That way you can buy the dip. Anyways, that's about it for the stream. I hope you guys liked it and found it useful. And until next time, everyone, have a great day. See ya.